So today we are going to talk about price, and just like I said, on your chart, all you are seeing is a graph between what the price is here and time. So what do we see on our charts? We see a graph of what? Price against time. Sorry. Let me delete this. We have a chart of what? Price against what? Against time. This is the graph we have. So when we have a graph of price against time, and we understand that time is a significant concept or a significant stuff in our life, in our day-to-day activities. We understand that there's a right time to do stuff, and there are right times to do right things, and there are wrong time to do right things. You get. So now I'm going to explain price. You get. So price is literally the amount or the value at which a particular asset or a commodity can be either bought or sold. You get. So you can either buy it for a particular price or you sell it for what? A particular price. So I'm going to give a schematic, an analogy to understand price movement. Because when you come to the chart, you see all this and it's confusing. Sometimes you want to wonder, why is it going this way? Why is the market doing all this and all that? You get. So just take it from me that by the end of the course, and after several studies, because after every video you should study it, um there'll be an assignment within. So after every video you should study, get your understanding of what of a particular module before moving to the next one. So today we're talking about price. I would like you not to take any trade for the meantime until when you're done with the videos and you've selected what you want to do and you've understood yourself as a person, you've reflected on your decisions and you say, okay, this is why I paid for this and I want to learn this. So now I'm back to the course of this video. I said price, and I explained that price is what? Is the value or the amount an asset, a commodity is being bought or sold. Good. So now on our chart, anytime we come to our chart, what we see is what? A graph of what? Price against time. Good. So I'm going to use the schematic differently from this. I'm not going to use the price against time that we're seeing. I'm going to use what? Distance. Let me just use our normal physics. If you've studied physics before, just say distance over time. You get. I'll use distance over what? Over time. So if I'm using distance over time, I would like to use what? I would like to use a machine or what? A car. So now let's use a car and let's use time. Now, if we have a particular distance from A to B, so this is a distance from what? Distance A. This is distance A. Sorry. This is distance what? All right, we back up. Just add a little bit network issues. All right, so I said we are going to what? You are going to use car as the analogy in explaining price. So when you come to the market and you see a price and you guess, okay, let me finish explaining, then we'll go back to chart. So now we said that we are going to be using distance A as this and distance what? B as this. We understand that price move from a particular distance to a particular distance, and At the middle of that journey, we have distance C. Or what do I say? Let me make this distance C, and the middle of the journey should be distance what? B. You can make it any location within you. You can call it any location you feel like. You get? But this is distance what? A, B, and C. So we have a vehicle that is traveling from distance A to, I'm coming. Let me make it a little bit clearer so that we don't have mistakes. Let me write this, I say against time, so we can just put um year to be what? Um, 1 p.m. and year to be as early as 6 a.m. And at the middle of the journey or the time should be the close to the midday, which is 10 a.m. Now good. We have a car that is moving from what? I'm just using the time like this. The time is supposed to be this way, but I'm just using it. It's supposed to be this way, but I'm just using this way so I understand the analogy. So if you have a car moving from distance A to distance B and reach there by 10 a.m., then that same car forgot something along the way to get and went back a little bit to take that stuff. You notice that it is taking the car now longer time to get to what? Distance C, because what? It has been going back to move, drop, take one passenger and go up. You get? And finally reach distance C at about 1 p.m. Now, you will notice that at every junction that distance the car took, it took a faster time to what? To reach distance B than it took the same car to what? To reach distance what? C. In the sense that this is your final destination for the car. And this is the movement from 6. This is the time it took the car to get there. You get? So in price, just like this car, in price, you see, you notice that this car can only do one thing at a particular time. When the car was going forward, you cannot see a car going forward and reversing at the same time. No. The car can only move forward at the same time and go back, reverse a little bit back to get something, then move forward again, reverse a little bit back, move forward, reverse a little bit back. Keep this in mind. I will explain why I use this word. Now, in price can only do one thing at a time, but price can actually do 4 things only. Price can do 4 things, but can do one at a time. Now, just like this car, it was moving in a straight line, straight to a particular destination B, and it went there faster. It wasted a little bit of time before getting to the final destination C. You get? And after getting to final destination C, the same car can take passenger from C and say, no, I've gotten to my destination C here. I need to go back to my destination A. And the same car will move straight down to A without even stopping in what? In B. Good. That same car can also take passengers and say, okay, I will explain this later. I'll come back to this. But for this is how price work. In price, you can see price moving from a particular distance to a particular distance, meaning around this level, price can expand. You get that? Price can what? Price can what? Expand. And when it does that, what do you see? What do you see price doing? When price expand, it's moving from a particular price to another price. It's moving from a particular price to another what? Price. It can either be a higher price or it can either be a lower price. So price can go this way, go down, or what? Or go up. So if price of BTC is leaving, let me use, okay, it's good enough. It's leaving 74,000 to 78,000. It has expanded. You get, it has what? It has expanded from a particular price to another. You get. So when we have that in place, you know that price is what? Doing an expansion at the moment. But this movement that price have done is kind of too fast. And most times after an expansion, that is the first thing price can do, expand. What? Expand. So price can expand, and after an expansion, price will do what? Price will what? Do a little bit of what? Pullback, which is what? Retracement. As I explained in the car forgot something within this journey and came back down. A retrace, a pullback. Price did what? A pullback downward, meaning price turned and came back a little bit backward before moving up. You guess, let me see. Let me see. Price came down before what? Before continuing the journey to the actual what destination. So this thing you're seeing here is what is the retracement that price have done. So let me just name it so that you see. This is an expansion, and this thing you're seeing here is what is the pullback or retracement, corrective pullback. I call it corrective pullback at times. That's the context of what price can do. Corrective pullback or what? Corrective pullback was or what? Retracement or what? Retracement. So these are parts of what the context at which price can be moving. So you can get price moving actually at a corrective pullback, just coming back a little bit after moving, after expanding in a particular direction, either up or down. So when you get price moving in a particular direction, up or down, and it's getting a what? A corrective pullback or a retracement, you understand that we are still what? Either bullish or bearish. You get? We are still either what? Bullish, which is up, or bearish, which is what? Down, meaning we are either buying or we are what? Selling. Now, good. So when we have an expansion, just like the car, and we have a little bit backward movement to get something and move in our actual direction, then we know that what? We are having a what? A retracement. But when we get to our direction, our destination, and we feel that it's enough, we are going backwards, we are going back home. We've gotten the next destination and we feel that, okay, we've gotten here and we want to go back home. At this particular point, it is not a corrective pullback, but what? A reversal back to where we started from. A what? A reversal back to where we started from. A corrective pullback or retracement is just within the first expansion, while a reversal goes as far as going to the ending of that what? Expansion. That is what we call what? We call what? A reversal. A what? A reversal. We have this as a reversal, and we understand that price is reversing backward. You get? So when you understand that price is doing a corrective pullback, and you are able to identify when price is doing a reversal, you have gotten 50% understanding of what price movement. So also, the last context at which price can move is what is just like the car, moving in what cycles, going to a particular high, going to a particular low, going to a particular high, going to a particular low. Meaning, for example, just like for the car schematic, a taxi going from a particular junction to a particular junction. So you know that the taxi is not going to go higher than that junction and it's not going to go lower than the next bus stop. You get? So that is what price can do. And we call this what? We call this a what? A consolidation. Price is ranging or consolidating. We call this a ranging market or a consolidating market. A ranging market or a consolidating market. This is what we call it, a ranging or a consolidating market. And when we have this, these are the four contexts at which price can move. So when we have a price that we know that, okay, the price of BTC is just going from 75 to 70, 75 to 70, 75 to 70. We know that market is ranging. We don't either know when to, at this particular market, we either know that we are going to, if we are having a ranging market, we are going to be selling at this high within 73 to 75, and we're going to be buying within 72 towards 71. So we are doing what? We are buying at what? The equilibrium level. We wait for price to go to the high and sell from there and wait for the price to come to this place. And we'll buy from there. But advisably, I'll always avoid markets like this, a ranging or consolidating market. It's easier to trade a market that is trending. Either it's reversing or it's trending, which meaning it's expanding and you're waiting for a retracement before you follow a corrective pullback, before you do what? Before you follow the market direction. So it's easier to follow a price when you know how the price is moving. Imagine knowing that the particular commodity that you are about to buy is going to, the price is going to keep going up. You will be very happy when you see the price coming down, knowing fully well that from now it's still going to go up. I know that. I know it's still going to go up. When you have that understanding of the market, when you are buying like you are buying what? You are buying the pullback after it has gone, it has entered a particular price that you feel like this is the best place to buy. So now, enough of the schematics. We are going to go to the charts and identify expansion market. We are going to try and identify corrective pullback, and we'll try and identify a reversal within our markets. So when we understand this, we understand the market is what is moving. So let's let us go to this market. Now, for example, let's say price have moved this way. Let's say price have moved this way. You see, price have expanded this way to the high. There's a corrective pullback. You see how it's moving. This is a what? A corrective pullback. You see the impulsive way price went up, and you see the corrective pullback price did. Before what? Before moving high again. So this corrective pullback is after a particular high has been formed, you get a corrective pullback before price do what? Price continue to move in the same direction. So while BTC was at 52,000, there was an expansion towards 58. They had a corrective pullback down towards 55, an expansion towards 60,000. We had a corrective pullback down to 57, an expansion also. You get an expansion to where? To where? To 61,000. And that corrective pullback. And we kept having an expansion, pullback, and all that. So this is an expansion. This is what? This is an expansion. And this is what? A pullback. And clearly, we could see that what? Price is what? Price is moving upwards. So price is bullish. So when you have a bullish price like this, you wait for price to do what? Have a corrective pullback. If you've missed the movement, you wait for price to have a corrective pullback, and you join the movement to what? To the high that was created before. So this is what? An expansion on the chart, and this is a corrective what? Pullback on the chart. So now let's look for a particular section. Perfect. We've seen one. We've seen when we've gotten a ranging what? A ranging market. You could see. What do we have here? Price going from here to almost here, down. You see? Here. Until we broke here. You see when price does this, you don't know whether to buy at 60 or at 64 because you're not going to make any major profit as a swing trader. So you see how price kept ranging, high and low, high and low, high and low, high and low, high and low. So when you know price is ranging this way, you understand that, okay, I have to stay out of this market and wait for a what? A very good direction. A very what? A very good direction. And now, within this place, there might be a particular high the price is reversing from, but you understand that, okay, good, this is what? A ranging market. Price is moving up and down, no impulsive movement within this place. There's no impulsive movement like this candle you're seeing here within this place. You see everything is just up and down, up and down. This is a what? A ranging what? A ranging market. So let's see a reversal. Let's see a reversal. Let's see what? A reversal. So within this market, you have this low, you have this low, you have this low. After getting to a particular point, which is 59,000, a very good low. And while you had that, you see that price came down. And after taking out that low, price did what? Price reversed. You see. So this, you have been expecting that you should have what? A corrective pullback after this to come here. But now price did not break here properly. And it what? It reversed backward. You get. So if you had chosen this as your expansion, and you wanted this corrective pullback, you notice that the corrective pullback did not break your low impulsively. You get. Then you have what? You have a reversal. And when you have a reversal, price is going to go directly to where? To where price was before, which was what? 66,000 high. So this is what? This is a reversal, and this is what? Retracement. Yeah, this is retracement, and this is what? Reversal. There are different ways of identifying retracement and reversal. Meanwhile, along the line, we are going to understand what price does after one another. So after an expansion, you are going to either have a retracement or a reversal. You get? And if you notice on this chart, price did not do two at a time. Why price was what? Was ranging. You could see that after ranging, price did what? Price did what? An expansion. You see, ranging. After ranging, what did price do? Price did what? An expansion. Price did what? An expansion. So this is what? This is you understand that after a ranging market, you are supposed to expect what? An expansion. You get? You are supposed to what? Expect what? An expansion. So this is what price does. It's either it's expanding or it was retracing. And within our course, you are going to understand when to spot opportunities within this movement, price movement. So you understand, is this the best time to spot opportunity within a ranging market, or this is the best time to spot opportunity within what? A reversal. You get. How do I spot a reversal? We are going to explain that in our subsequent videos, and you get to understand when to use your reversal, when to use your retracement, how to enter a reversal, get a very good opportunity or a buy or sell opportunity from a reversal, or how to get a very good buy or sell opportunity from what? Expansion. So I think that's the end for today's class. We'll just go to any of the charts, mark out the expansions and the retracement within the chart, and keep practicing it until you understand properly. Thank you for watching.